Hey, welcome to Jazz After Dark, everybody. How you doing here tonight? Welcome. Tonight we are trying Jacob's Pardon. Actually, pretty cool. The Tao brothers, back in the day, made some whiskey during Prohibition, and they were arrested. But then after the end of Prohibition, Roosevelt actually pardoned them. And since then, they've had three generations of families making this. And so I read a little bit about it. It's not the most expensive one you can buy. It's the 8-year version, but I've never had it. Let's give it a try and see. We are financial advisors here at Jazz Wealth. Ranked the 66th best advisor in all of America by USA Today. We didn't pay for that. They just, like last year, we were like 460 something. This year, 66. Well, pretty impressed. You want to look it up on US? Oh, boy, that is strong. Wow, I almost sneezed. Whoa, my gosh. Okay. As my dad would say, that'll put hair on your chest. That is strong. What is going on here, Jacob? All right. If you can't handle your whiskey or you're new into this, that is not the one. That is intense, man. Holy cow. Anyways, 66th best advisor for some reason. Maybe sitting here drinking with you every night. We'll lower that next year. But for the moment, we're 66th. We do appreciate it for all of you that have considered us. Let's take a look at where we stand here tonight. If you don't know, by the way, Jazz After Dark is kind of a hangout, kind of a show. We're just kind of chilling. Nothing too quick here. If you want to see other videos, of course, you can check us out, jazzwealth.com. Here we go. Here's the S&P. So we are now going into our third year of this bull market. So we got about a 68% rally since the lows coming out of that last bear market. And historically, year three, by the way, we track this stuff. I'm going to share some data with you. I'll probably go a little bit further than we need to go here. But historically, year three is the weakest of all bull markets that last more than 2 years. So not every bull market lasts 2 years, right? And so if it lasts at least 2 years, that third year tends to be the weakest. The average performance is a slight gain, about 50-50 shot of an average gain of 2%. So it tends to be a little bit quiet. Well, we're not talking calendar years, we're talking bull market years. And so now this week, we're going into the third year of our bull market. Well, what does that mean? Does that mean it's time to invest in the market? Well, maybe not. You just heard that stat a second ago that the third year tends to be weaker. It's also an election year. We've got China, the economy getting weaker by the second. I don't know why that's not news over there. That's something I have a bit of a history with, is teaching the Chinese investors. I'm fairly well in tune with their economy. It's not good over there. We also have a Ukraine-Russia war. Are we still talking about that? Is this going to be like the ozone layer where it just kind of goes away and we never really know what happened to the ozone layer? Of course, you've got issues with China and Taiwan still getting worse. Like if you really look over at the news over there, it's not going well. You know, all kinds of stuff going on. If we look at the U.S. markets here, well, I shared this before. I'm going to kind of highlight this, then we're going to move on to some other stuff. In the S&P, we now have over 22% of the stocks in the S&P 500, just over 100 stocks there, making new highs. Right? And this was just the other day. So it's a daily tracker. Well, that doesn't sound like a lot. So my question is really like, tonight, what we're focused on is, can we find something that says we should back the truck up and invest large sums of money into the US stock market now? And I'm going to use the S&P as an example. Or should we just kind of keep dollar cost averaging and not really worry about speeding things up and kind of hold on to our cash for the moment? That's really where I'm looking. So I shared this last week where we have 22% of the stocks in the S&P making new highs. Well, look around. That's not normal. That's about the crest of where we normally see stocks in the S&P. We don't normally see 50% of all stocks in the S&P making new highs. Now, I'm not complaining, by the way. This is one stat where I'm not complaining, because if we look at the beginning of the year, what I was complaining about is there are only 7 stocks moving the market higher, right? I did not like that. So if we look back at the beginning of the year here, all the way through this was the Magnificent Seven, right? the biggest and most heavily weighted stocks in the S&P driving us higher. There was no participation with anything else out there. And I kind of thought, I don't like that. They took a break and so did the market. They took off again and so did the market. Well, now in the second half of the year here, we don't have them participating, right? If we look over at the tech sector, by the way, it is not making new highs. If we look at some of the semiconductors, which is just a sub-industry or an industry inside of the sector, they're not making new highs either. If you look at some of the names, right, that are inside of it, Alphabet, Magnificent Seven, it's not doing anything there. I'm going to go to Meta. Okay, it made new highs. I'll give them this one here. That may be a little bit fine there. Netflix with their earnings. Okay, finally, it's making new highs, but that took an earnings day to make that happen. If you look at Amazon, it's not making new highs. So what's going on here? Well, we have the rest of the market making new highs. The utility sector of all sectors, right? That's like the craziest thing to say. Utility sector making new highs. Communication services making new highs. You can go through all the different industries. They're not all going to be making new highs. But as you look through the different indices, industrials. Who's talking about industrials? Well, that's the participation in the market. It's really kind of fascinating to see. So on one hand, you could look at the market and go, I'm in, let's go. We're firing on all cylinders here. We're looking really good. On the other hand, you go, wait a minute. There's a lot of stocks in the S&P making new 52 or making new highs, but that's a high number. You could even look inside of the financials. They just had their earnings, so I'm picking on them because they're finishing their earnings cycle here. But we have over 30% of all stocks in the financial sector making new highs. That's not normal. There's only a couple times over the last year that that's actually happened. So that makes it a little bit tough. Do you back the truck up and invest large sums of money here, or do you wait and see what happens? And I sound like a broken record here. I know. You can go back 6 months and see a video. I was doing the exact same thing. Like, hey, I would invest, but I'm not going to invest big chunks of money here. So, take it for what it is, but that's just where I currently stand. Let's go a step further, though. We now have, I'll do it this way. We have 2 years where we have over 20% gains, right? So we're sitting at just over 20% right now. Last year, of course, was over 20%. And so is that normal? Like, do we have 20% gains that build on 20% gains? Or does that also signify something that maybe we should be concerned about? Remember, year 3 of the bull market tends to be the weaker one. But what about back to back to back big gains in the market? Oh, I don't know. Let's look over here. We're going back to 1954 just for this particular moment here. We have, at the moment, 22.5% gains. Last year, over 20% gains. Let's just find any other time where we've had over 20% gains. Yeah, 1 year. Nope, skipped a year. Okay, we got a year there. Nope, skipped a year there. Nope, nothing here. 4 of them, all in one shot back in the 90s. All right, no problem. That's 1. Nothing. Okay, nothing here. We're going, looking along. We got to go back down to the 50s. To find how many times the stock market just gave us 2 years of 20% gains. What happened after that? Less than 2% gain. What happened after this? Negative returns, actually, right? So would it be normal to say that we are in year 3 of a bull market? We have back-to-back 20% gains, and we do not, there's one time, right, in the last over 60 years that we could say we had back-to-back-to-back positive gains. So do you invest large sums of money here? Or do you sit back and go, just give me something. Give me a 5% move. Give me a down day, for God's sakes, right? See where I'm kind of painting the picture here? All right. One last thing I want to share with you. We are in year 3 now of a bull market. Again, not calendar year. We're in year 3 of a bull market. What does the market do in year 3 of a bull market? Do you know there are only 11 other times in the entire history of the US stock market where we have had 3 consecutive years of a bull market? That's it, right? You could go back to the 1929 when the S&P first came out. There are 11 scenarios. We just hit the 12th scenario. So I thought, what if we could just plot everything over the top of each other? Just see what happened over the next year. Is it really weak? Should we be nervous? Is it really strong, or what is it? Well, I already know the answer. I'll share with you. Here we go. If we have 2 straight years of a bull market, in other words, 24 months of a bull market, what does the next 12 months look like? Do you see anything that causes you to get excited? All right, let's look at it. So horizontal line here, dead center, that would be like if nothing happened for 12 months. All right. So we're looking at the performance day to day of each one of these bull markets. They're all color coded. You can pause here and take a look if you want. We have half of them going higher to varying degrees, not necessarily exciting. One of them right in here, right? Moving higher, that's fine. And then half of them going lower, not collapsing, right? Look closely at that. 10, 15% drop right in there somewhere. So this isn't doom and gloom, end of the world sort of thing. I'm never going to paint that picture to you. However, we don't have anything to go on, right? Give me something. All the news events that I mentioned earlier as we started here, and now the stats. Give me something that says I 100% need to be all in at this very moment in the S&P. Anybody? Go ahead. Leave a comment down below. Give me something. See how there's not anything at the moment? And we have the elections coming up. Okay, maybe we want to see how that plays out. It hasn't been all that crazy, by the way. This election cycle, news-wise and how the two opponents have gone after each other, not really that bad. Does that mean it's not going to be bad? Did you know that on election day, which would be the next day, the options market is currently pricing in the most volatile day in history? Not the most volatile day since the last election, or maybe, first time Trump was elected. I don't know if you saw the futures market the first time Trump was elected. Crazy, right? No, they're pricing in the most volatile day ever in history. Okay, so we got that. We got all the news that I mentioned before. We have the 3rd-year bull market stats that I gave you. We have that chart there that I'm still looking at here where sometimes we're up, sometimes we're down. I don't know, right? Should we maybe sit on our hands a little bit? Is it that important to you in your current plan to just dive all in? And if it is, I would want to see your plan. All right. So I can't say this for all clients, by the way. So if you want to check us out, jazzwealth.com, blah, 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 right? There are some clients that are so close to achieving their plan, like we may or may not get there, that they cannot sit out in any percentage. They can't have 1% in cash. Then I have most clients that are like, well, we can have 20% in cash. We don't need to go all in right now. We can have 50% in cash. We don't have to go all in. And this is my argument. And granted, I know it's not a good one because 6 months ago, I'd have made the same argument. So you can pick on me for that. I'll take it. I agree. I will take it. But if you are looking at your plan going, I'm beyond on track for retirement or for whatever your long-term goals are, just ask yourself, is this the moment in time that you feel like you need to be 100% invested? I'm not saying time the market. I'm not saying go sell. Oh, hopefully things get. I'm just saying if you're not 100% invested and you have cash, we don't have this fear of missing out type environment right now. The FOMO market doesn't exist. It's just kind of grinding along. And so with that in mind, and I genuinely, like, this genuinely has caused my throat to be a little bit sore. Jacob's pardon, by the way, 97.1 proof. That might have something to do with it. If you're feeling gutsy one night, I don't remember what this cost, but that is no joke. That is Prohibition era, 3 generations of family coming at you. Anyways, I'll wrap it up there. Just wanted to share that stuff with you and just kind of see where you stand. I'll be watching the comments, see what you feel like. If I'm off base or you want to pick on me, that's fine too. I can handle it. Been around for a while. But otherwise, I hope you'll check us out at jazzwealth.com. If you're looking for an advisor that can help you get your dough straight, we are not financial advisors. We are wealth managers, Jazz Wealth Managers. We want to help you with all your dough. Anyways, enjoy the rest of your evening, and thanks for chilling with me for a little bit. I'm not certain I'm going to enjoy much more of this stuff. I'll try, maybe next time I'll try it again just to see. I don't know.